Hi, welcome to the second video by the Western Beef Development Center on cost of production. Recall from the first video that we covered what is cost of production, what is unit cost of production, and how to look at your ranch in a series of enterprises or business lines, and how you can calculate cost of production for each of your business lines. Then went into some of the key elements when doing cost of production analysis. In this screencast, I'm going to go over the details that we require to do cost of production analysis for your operation. So what details are required for cost of production calculation? Both financial and production details are needed, and financial details are relatively easy to come together and pull together. They'll come from your accounting records. Generally, the issue arises when you have to split shared expenses across your enterprises, and we talked about that in the first video when we look at expenses such as fuel or machinery repairs, utilities. Generally, those are expenses that each of their business lines, so your cow-calf enterprise, your replacement heifer enterprise, your backgrounding enterprise, your forage enterprise, and your grazing enterprise likely all contribute to those expenses. And so you have to figure out a way to percentage them out or allocate them out across the enterprises. And that is why you need to use cost of production calculator like the one that will be discussed in our upcoming videos. Complete asset listing with current market values is also needed, and that's in order to calculate your depreciation expense. Production records are those that don't tend to be as well tracked in my experience in dealing with cow-calf producers. You need to be able to provide winter feeding details, so the dates that your cows were on winter feed, what was fed, the cost of that feed, either a value for it if it's homegrown or the actual price paid if it was purchased. Grazing information, so the date the cows went out onto grass and the various times that they spent on the types of pastures that you may own. Some of it's rented or community pasture or lease land. It'd be best if you could provide some details for each of those types of grazing land and the number of head that grazed and a value for the grazing or the actual fees paid if it's rented or leased land or community pasture. Inventories, you need to know various counts of your animals at various times of the year. We'll get into that a little bit more in the next couple slides. Calf crops, or the number of calves born, death loss, the number of calves weaned. And there's a series of animal data that needs to be able to put into the cost of production calculator, so certain weights for certain classes of animals at certain times of the year, for example. So recall, the ranch is a collection of businesses or enterprises, and so here is a ranch that has a cow-calf business, but it also keeps back calves for backgrounding. It keeps its own heifers for replacements, and once those heifers are confirmed pregnant, they'll return back to the cow-calf enterprise as bred females. They own grazing land and own hay land to make hay to feed back to their livestock. So this operation, this ranch, has 5 enterprises, and cost of production can be calculated for each of those enterprises. When it comes to inventory information, there's some key points in the year that you should take inventory. And this graphic is borrowed from High Plains Ranch Practicum out of the United States, that also does a number of cost of production tutorials on its website. And I just thought it was a great way to capture the important times for counting your cows and calves throughout the year. So you're going to start with bull turnout. So when the breeding season starts, how many females did you expose to breeding? At preg check, how many females were confirmed pregnant? How many were open? January 1st or the winter feeding start or the start of the year, another cow count would be useful. Then also keeping track of your calves that were born, calves that were weaned, calves that were lost, death loss. And then by the end of the year, you want to be able to know the number of cows and bred heifers you have on hand, cows that died, cows that were replaced. So there's red font for and an asterisk beside females exposed and cows and bred heifers at January 1st. Those are 2 critical times to be able to count your herd inventories and count your females. There's also important dates to track throughout the year. You're going to, if possible, provide information on your breeding season, so your bull turnout and pull dates, your fall grazing, when did it start, if you do in fact use fall grazing, winter feeding, your start date, when did you start calving, when did you turn out your cows to pasture. The breeding season for the next calf crop will be in there, and you'll need to keep track of that for when you do cost of production for next year's calf crop, and then when's your weaning date. So a number of dates throughout the year that are useful to keep track of. Generally, when I work with producers on cost of production, sort of the starting point is breeding stock inventory. So just sort of recapping what we've just talked about over the last two slides, the number of females that were exposed to breeding and the number of bulls used. And if you're doing it for cost of production on your 2014 calves, you'll be referring to the breeding period that happened in summer of 2013. Then when you preg check in the fall, how many females were safe in calf, how many were open. And that information is useful then to calculate your conception rates and your open rates. January 1st, the number of cows, bred heifers, and bulls, or whenever you have a time that you're working with the animals through that fall-winter period is a good time to do a count. And then at the end of the year, you'd also want to know your count of your animals. And for people that don't have a January 1 to December 31 accounting year, then do counts that follow your accounting year. You also want to know the number of animals that you culled, you purchased, or lost throughout the year, and you'll be required to provide starting and ending market values for your breeding stock in order to come up with a breeding stock depreciation calculation. The 2014 calf crop details, that's your primary source of revenue for the cow-calf operation. So you want to be able to provide details on the number of calves that were born live, the number of calf deaths that occurred, number of calves that were weaned, and by gender if possible. What was your weaning date? What was your weaning dates for heifers, steers? If you can split it out by gender, that would be ideal. And then your sort of your weaning management. What I mean by that is what happens to the calves after weaning? How many of them were sold or possibly kept for a bit for preconditioning and then sold? How many were retained for replacements? And how many were retained to background? Next, if you move into replacement heifers and you want to do cost of production on them, these would be, if you're doing it for the 2014 calf crop, generally I ask a producer to also then look at your heifers that will be exposed to their first breeding in 2014, having their first calf in 2015. So these would be 2013 born heifers. How many of them did you keep from weaning? And if you're going to come up with a starting value, a good point to capture that value is at weaning time. So you'll need to know their weaning weight and a market value at that time. How many of them were exposed to breeding? In the fall, how many of them were open and how many of them were bred? And then if you had to sell some opens, what was the revenues received? And then eventually, how many bred heifers transferred into the cow herd in fall of 2014 in order to have their first calf in 2015? And the ones that are transferring into the cow herd, in order to generate a revenue source for the replacement enterprise, you'll have to come up with a market value for those bred heifers. So essentially, what could you have sold them for off the farm? If you want to do cost of production for your backgrounders, again, look at the 2013 born calves that would have been marketed sometime in 2014. Good place to start for their starting value and weight is at point of weaning, where they were taken off their mothers and then put onto feed. And so you'll need their weaning weights and a market value, and what date was it that they were weaned and put onto feed, and then eventually what date were they marketed. So that's the end date for feeding. Was there any additional head purchased for backgrounding? Did you lose any to death loss? And if you don't sell them off in the spring and you actually transfer them to grass or feedlot, how many head were transferred? What date were they transferred to grass or to a feedlot? And what was their weight to come up with a market value for them so that you can realize a revenue to the backgrounder enterprise? And if you actually just sold all your calves, and what was the actual of dollars received for those animals and the weights when they were sold. Cattle sales, purchases, and in-herd transfers. I've touched on that a little bit through the last few slides, but it's always important to be able to reconcile the number of head, the animal type, the weight, and the date that you had sales for your cattle. You will use actual sales revenue when there is an animal being sold off the operation. So for cull breeding stock, open heifers, wean calves sold at weaning, feeders, grassers that are sold. But if it's just an in-herd transfer, you need to estimate a market value. So we've just talked a little bit about in-herd transfers. That's when, say, a bred heifer transfers to the cow herd in the fall after being confirmed pregnant. There's a value for that bred heifer that will be realized to the replacement heifer enterprise, and it's an expense realized to the cow herd. Wean calves kept for backgrounding will also need to be given an estimated market value as they transfer from the cow-calf enterprise to the backgrounding enterprise. Similarly, from the backgrounder enterprise, any that are kept to, say, go on to grass, the feeders will realize the revenue, and the grasser enterprise essentially realizes an expense for those animals as though it purchased them from the backgrounder enterprise. You also need to provide purchase details for any herd sires that were purchased for their operation, say additional feeder calves or bred heifers, bred cows, things like that. Winter feed is it's typically the largest expense for the cow-calf operation. You need to be able to report the start date for feeding in the fall winter of 2013. So it's the winter prior to the 2014 calves being born. You want to be able to report all the feed, so hay, green feed, silage, grain, pellets, you name it, be able to report how much was fed to each of the enterprises. So the herd sires get tacked on to the cows. The replacements have their own winter feeding program. The backgrounding animals have their own winter feeding program. And can you determine how much feed was fed to each of those? If it's purchase feed, then the actual prices paid will need to be used, but if it's homegrown feed, we discussed this in the first video as well, you'll need to come up with a market value for that feed. Also be able to report on any bedding that you may have used for those different enterprises, and mineral and salt. Grazing information needs to be reported for grassers, cow-calf, and replacement heifers. You'll have various types of grazing: pasture, aftermath, swath grazing, stockpile grazing. It's best if you're able to do sort of date in, date out, or at least number of days total and the number of head for your different types of grazing. Be able to report the actual fees paid when it's leased land grazing, community pasture, or rented pasture. And on your deeded pasture, you need to charge your cows a fair market price. This grazing information is also then used for your pasture enterprise when you're doing cost of production analysis for it. As the grazing here, the fees paid and the market price for the deeded pasture becomes the revenues realized to the pasture enterprise. Any vet procedures, vaccines, livestock supplies, from say vet visits for pregnancy checking or breeding soundness evaluations, vaccinations, antibiotics, parasite treatments, RFID tags, all needs to be reported. Shared expenses, we went over this earlier in the video. You may also hear the words yardage or overhead when referring to these types of expenses. So that's your fuel, your repairs, custom work, hired labor, utilities, taxes, insurance, freight, marketing. Capital and operating interest, we do not include the principal portion of your loans. Depreciation, unpaid labor. You need to pull all that information. Most of that is coming from your accounting records. Unpaid labor, you need to estimate a value for your hard work and management. So what should be a reasonable wage for you? And as I discussed in the first video, ranching is your full-time job. That's about 2,000 hours a year. $25 an hour is the average hourly wage rate for the primary sector, so agriculture, forestry, fishing, and mining. So is it reasonable for your ranch to provide you $50,000 a year in income? It's at least a starting point for you to value your unpaid labor. On the depreciation expense, you'll need to be pulling together a list of all your assets. So as assets age, they lose value or depreciate. So you need a current market value, not the purchase price, for all your buildings, fence, livestock equipment, and machinery. And then there's a percentage of that current market value expensed each year. That's the depreciation. So in the table at the bottom of the slide, you'll see cost of production, COP in red. And so for buildings, 5% of the current market value is expensed each year. Non-powered machinery is 11.5%. Powered machinery, 8%. And I also usually put livestock equipment under the buildings category at 5%. Inside of a cost of production program or calculator, you will be able to list your assets, their current market value, much like this table shows, and then it will calculate your annual depreciation. So in the first row of this table, you see a tractor at $55,000. It is a powered piece of equipment, so 8% depreciation each year, $4,400. And then you'll see headings cows, replacement heifers, pasture, hay. So on this operation, there's 4 enterprises. And all of them use this asset, and you'll see 40% of the asset being charged to the cows, replacement heifers 15%, pasture 5%, and hay 40%. The next line, baler, that's something that gets used entirely by the hay enterprise, so it has 100% of the depreciation charged to it. The handling system, $10,000 at 5% depreciation is $500 a year. 70% charged to the cows, 30% to the replacements. And this type of exercise has to be done with all of your assets. And in the first year of doing cost of production is generally when a lot of this work happens and all that allocating and percentaging out happens. And then for each year afterwards, you're just doing minor tweaking. Maybe you sell your baler and buy a new one, and then you'd have to update that information. But generally, your percentages shouldn't change very much from year to year, if at all. The same exercise of allocating expenses, allocation of expenses needs to occur where you have your expense categories, your total expenses brought from your accounting records, and then splitting it out across your enterprises to come up to 100% of the expense being allocated. So you can just see in this table, fuel, $7,500, and it's split across the cows, replacement heifers, backgrounders, pasture, and hay for this operation. If you want to do cost of production for your forage enterprise, if we're looking just at the 2014 forage production, it's best, you'll see in the calculator that you'll report your acreage and production for each of your forage types. So your different types of hay if you want, if you have a alfalfa hay, or if you have alfalfa grass mix hay, green feed, silage, swath graze, and also include in this tool your straw production. You'll report how many bales, your bale weight, and the market value of that forage, or you can report your number of tons and the market value. You'll have opportunity to report your forage specific expenses, so twine and net wrap, perhaps fertilizer, chemical, and seed, especially in the production of green feed, standing hay. So if you bought hay standing that you swath and bale yourself, you can report the cost of that standing hay. If you had to hire someone to custom hay for you, you report that forage specific expense, and then obviously hay equipment repairs. For cost of production on your grazing land or your pasture, you'll be asked to report acreage for deeded, rented, and leased pasture, then the number of days grazed on your land, the number of animals grazing, and you'll need to come up with a market value, dollars per head per day, or your actual fees paid for rented and leased land in order to generate a revenue source for your pasture enterprise. You'll be reporting your forage-specific expenses such as rental fees, lease fees, fencing, repairs, etc. that's the end of the types of information that you're needing to pull together in order to do cost of production analysis. If you want to find out more about Western Beef Development Center and its cost of production work, visit www.wbdc.sk.ca. In the next video, we will move into the cost of production calculator that is available through Western Beef Development Center. Thank you.